Hello, this is Brian Shannon from Alpha Trends Blogspot. What we're going to do today is take a look at some of the stocks that you guys have requested. And someone had mentioned, hey, you might regret doing this. And I don't quite regret it, but I got a lot more responses than I thought. So I'm going to do this in two pieces. Let's go ahead and get started first with Broadcom, symbol BRCM. Broadcom was by far the most requested stock that people wanted me to take a look at. So looking at a daily chart of Broadcom, first of all, the 50-day moving average, the green moving average is declining. That tells me we want to be cautious with this stock. Now, most people were looking at it as a long position, and I think the reason for that is when you look at the weekly time frame, it's definitely been sold out pretty deeply in here. And the way that stocks generally bounce is they'll bounce somewhat and then they'll settle back down. It's similar to dropping the ball off of a 10-floor building. It's going to drop up, bounce up maybe the seventh floor, and then it's going to bounce up to the fifth floor, the third floor. Then it's going to go sideways for a while, and then you're going to see a the stock just kind of people lose interest in the stock. We've got a weekly time frame here, and we've got all these moving averages declining. So on the longer term basis, it's still in a downtrend. On the daily basis, the stock's looking for support in here. I think it broke below an important support level Friday afternoon. Now we might find a little support at the 50-day moving average. With all these moving averages crisscrossing like we have in here, it tells me there's indecision in the stock. And generally speaking, I want to stay away from a stock like that. I'm looking at an hourly time frame right now. We saw a nice stage 2 uptrend over here. We saw these moving averages crisscross stage 3 distribution. It broke down below the low of stage 3 right in here. Now it looks like we're in a stage 4 decline. We've seen lower highs. Now we've got a lower low to match. And I wouldn't be surprised to see the stock pull back down towards 25. I know that's not what you guys want to hear. Best case scenario for this stock is if it can somehow quickly get back above $28.50 a share. Until it can get above $28.50, I would stay away from this stock, and I would actually think that it would make a better short sale candidate. One emailer said, I'm looking at gold, GLD, and OIH, and I can't decide whether to go long or short. I've got paralysis from analysis. Please help me out. Well, we're looking at gold right here, and what's gold doing? It looks like it's just consolidating in here. All these moving averages are crisscrossing. There's no reason to do anything with gold. If you look at it and you can't decide, do I go long or do I go short, don't forget there's another position, and that position's called cash. I'd stay away from gold. I'd short it below 60 and maybe you could get a trade above 63 or so on the long side. OIH, the oil service holders, oil's breaking down. These guys are, finding support near this 130 level. It's making these lower highs in here, and just looking at a daily time frame, let's back it out to a weekly time frame. They've had a huge run. If you're thinking about getting long this stock, you're clearly late to the party. You could even say that it's making a head and shoulders top, possibly. Looked like it broke down through there, but recovered. Now it's just kind of going sideways. Same, pretty much the same as we saw with GLD. You got this 10 and 20-day moving average crisscrossing, and you've got a lot of indecision. I would say, again, on this one, I think you called it right that there's a lot of indecision there. Therefore, just stay the heck away from it. Palm, PALM. Here's a stock that another stock that one person requested, only one stock. I think there were only about two people. Everyone else requested at least two. Looking at Palm first on a weekly time frame, the stock's gotten beat up. It looks like now it's undergoing maybe some accumulation on the daily time frame. We've got more indecision here. The stock's rallied up to the 50-day moving average and found resistance near there twice. Now we've got this, back and forth sideways actions with the 10 and 20-day moving average. And basically, I'd stay away from this one. I think breaking below $14.40 or so, the stock could be in for trouble. It's making lower highs recently and finding support in here. I think a break below there, I don't think there's a lot of downside, but down certainly towards about $14 a share. You need to see this 50-day moving average start to flatten out. That's going to take a month or two for that to happen. And then you would want to buy it above these highs right here. So for now, Palm, a lot of reason not to do anything in Palm. TGB, this is Taseko Mines. Here we've got a nice weekly time frame where it had this big run up. It pulled back down towards the rising 200-day moving average, and it's still searching for support in there. And now what do we have in here? We just saw a recent gap down. I don't like that. And it's holding below this prior level of support. So in other words, support is acting as resistance. Now, when we look at a or an hourly time frame, we've got a whole bunch of back and forth in here. I'm going to say again, stay away from this one. I hate to be, it sounds so non-committal, but I told you I'm going to call them the way I see them, and so far I really don't like the way any of them are really set up for a good trade. This one looks a little bit better, symbol DK. It's called Deluxe US Holdings. We've got a nice daily time frame, looks like a recent IPO, and we see, excuse me, we've seen first this 10-day moving average acting support, then the 20 again, and here the 20 one more time. So it's acting good on the uptrend. Looking at a 10-minute time frame, it got back above that 5-day moving average on Friday. I think that a little bit further pull. What I'd like to see here, let's look at a 5-minute time frame. I'd like to see maybe a little bit further pull back down towards this level. You can see that it's got these little lower highs and lower lows in here. Maybe a couple more low, another series of lower highs and lower lows, and then I think you could probably buy it above $20 and $21 and what is this, about 21.25, and set your stop. Somewhere down near that area, and I think you would be in for probably a retest of these highs up near about 20, close to 23 or so. Ameritrade, symbol AMTD. This stock, we've got the 10-day moving average just starting to cross down through the 20, so that's telling me there's potential indecision here. Let's back it up on a weekly time frame. The stock's had a big run, and after this bounce, now it may be due for a little bit more of a pullback down towards the 50-day moving average. This person was looking to buy it above 1760. I think if you're going to look to get along this stock, that the 5-day moving average is heading higher, so above 1760 would make sense, and hopefully you could put your stop maybe underneath this level right in here. As far as upside goes, I don't see a lot. I think that there's maybe up to about 18 and a quarter or so. So would that be about 65 cents of potential upside and maybe 25 cents of downside. So it's not a bad setup as far as risk reward goes. AVII, AVII. Now this stock, AVI BioPharma, has been, this is a wild speculative stock. It's got something to do with bird flu, I think. It gets going massively, has these real sharp pullbacks, and now it's bouncing. It's up to its declining 100-day moving average. Daily time frame, it's got a nice little tight consolidation going in here. Let's take a look at the hourly time frame. You can see in here that this little level of resistance is acting as support. So clearly this is an important area just below the $4 level. So I would say a stop goes below that. And the idea was to buy it above 418. I think that's a reasonable reasonable place to buy it. Stop just under $4 a share, and maybe it can make a run for the 200-day moving average up near that $5 level. Okay, next up we've got Qualcomm. QCOM is the symbol in here. And again, we've got a 50-day moving average that's declining. Sure, it's above it, but more importantly, what's the direction of that moving average? Because these are the moves that generally fail. They suck in a lot of people because the healing hasn't been done yet, and then they fail. So looking at a weekly time frame, again, here's, this ball got dropped off of the 30th floor. It's bouncing back up a little bit, and then it's going to, probably go back and forth for a bit. But the daily time frame here, looks bullish in here in this case, that just the fact that, here's where there's important support down near about 36.5. Getting below that, everyone get out of this stock because it looks like it's going to go back down to 33. Now, looking at a 10-minute time frame, we've got this series of higher highs and higher lows, but it's just a very choppy stock. I don't like trading stocks like this that are just so choppy, all this back and forth. If you're going to trade it, I think it's a day trading stock because there are a lot of good volatile moves in there. Looking at a 2-minute time frame, you can see how it goes from stage 1 to stage 2, stage 3, and then stage 4 right in here. So Qualcomm, I'd be very careful with this stock. I don't think that it's really set up good, and I think it's a pretty dangerous stock. Now, the idea here was, where do I think it will be in 2 months? If I really had to, gun to the head, I'd bet you it's probably down back towards $35 a share again. Fortunately, we don't have to make these bets. We can find the opportunities that are better. And again, I might be dead wrong on these analysis, but this is just an experiment to see, just to try something new with the blog here. TIE symbol is a symbol for titanium materials, TIE, and you can see it's acting perfectly the way a bullish stock should. First, it finds support at the short-term moving average, then this intermediate term, a little bit longer, and now the real long-term moving average. This is a 40-week moving average. So it's finding support down here. It's undergoing distribution on the longer time frame. That is, the short-term moving average went through the intermediate-term moving average. Now, in the daily time frame, a big mess in here. It looks like maybe it's going to make a run up towards this 50-day moving average. Might get a little bit above that, but I would stay away from this. This stock looks dangerous. And I don't mean to just dump on every idea here, but there's just, you've got to learn to find the ideas, especially for short-term trading. There's no reason to take such risk, especially after a stock has had a run like we've seen here, 26 and a quarter up to 27.60. So I would just stay away from titanium. DHI, DR Horton is the symbol, the name of the company, and someone's looking at this as a potential short trade on the short side. The stock has dropped a lot. Always ask yourself, where does the stock come from? Where does the stock have the potential to go to? And here it is at multi-year levels of support from from 3 years ago. So we've got this level where it is right now, and this has been an important area, this 20-ish area. Looking at a daily time frame, we've got back and forth moving averages. What's this tell me? Indecision. These moving averages crisscrossing tells me indecision. Now we do have a declining 50-day moving average, so that that would tell me that I would want to lean towards the short side here. But because we've got these moving averages crisscrossing, it tells me there's not going to be a lot of opportunity. It's not a trending stock. I want to find the trending stocks. The best trending stock so far was, I think, that DK was the symbol. But DR Horton here, tough to say. If you need to short it, I would say probably below here, but I think there's probably a lot better short opportunities out there. Lam Research, LRCX is a symbol here, and this stock had looked like it was breaking down, and in fact, you're still looking at a stock that looks like it's in for some hurt. This support being resistance in here, looking at the daily time frame, it's right up to this area. Now, support and resistance aren't to be drawn with a pencil. They're in a sharp edge. They're to be drawn with a crayon. So it's more of an area of potential support that has or of prior support rather, that has the potential to be resistance. And I think the stock rallied up to that level. Now it's starting to pull back. If we just look at so right in here, this tells me that, why does support become resistance? Because all the people that bought over here are feeling bad about the stock at this point and this point. And as soon as you tell yourself, hey, I bought it at 43, and it drops down to 37, you tell yourself what? Hey, if I could only get my money back, if I could only break even, then I'm gonna get out of this stock. That's how this prior level of support becomes resistance. This is a natural source of supply there from people who are stuck in the stock. And then, of course, you're going to have your short sellers that are defending their position in here. You've also got that 200-day moving average. So, as far as Lam goes, I think I don't like to short them against the direction of the 5-day moving average. I don't like to trade in the direction against the direction of the 5-day moving average. But I think that this rally will fail in Lam Research. So I don't like it as a short. MXIM, as far as a long trade for the next 4 days, look at these moving averages, back and forth, crisscrossing. We've got a declining 50-day moving average. Tells me that there's really not a lot going on. This longer-term trend is showing no signs of slowing down. We've got the moving averages crisscrossing, but that doesn't mean it's going to turn higher. And this 10-minute time frame is just a complete mess. I don't like EDS at all. I'm sorry, Maxim at all. I would not trade it. EDS is the next symbol, and here we've got a stock that just eyeballing it real quick. And I didn't even look at these symbols beforehand, so accept this analysis as just a quick analysis is all it is. But we've got a clear level of 24.5 right up in here that's where there's sellers. I mean, the stock keeps coming up there, and even on Friday, we saw the stock rally up there intraday and then pull all the way back down. Look at how these moving averages are crisscrossing. It's telling you there's no trend in this stock. So in order to look for a long position, it doesn't make sense. Looking at the weekly time frame, it looks like, a low volume rally in here too that's probably going to fail and then break back down. Consolidations usually continue in the direction of the trend on the bigger time frame. The trend on the bigger time frame here, the weekly time frame, is down. So this consolidation should not be trusted as far as a breakout goes. If you need to buy this stock, and again, I wouldn't buy it, but I would say, wait for it to maybe show some signs of strength. This little downtrend from Friday, these clear levels of lower highs and lower lows, get it. Let's see, maybe it gets above this high, above 24.15, then put your stop below 24. There's always a low risk way to trade this stock, but what are the odds? What's the likelihood? QLogic. I really didn't understand what what I think it was Frank was saying about I don't trust, or you setting me up. I have no clue what you meant there, Frank, but we'll take a look at QLogic anyways for you. Let's start with the weekly time frame. A big mess, just a bunch of back and forth action. The daily time frame looks a little bit better though. Here we've got the stock has broken past this level of resistance. Now hopefully should act as support. The 10-day moving average is above the 20, which is above the 50. It's also above the 200-day moving average, so that's good to see. On a 10-minute time frame, the stock is extended, but breaking back up above this level, maybe it's going to get another run higher. You could put your stop under this level here at about 1840 or so. So that one looks pretty decent. Chaparral Steel, CHAP is the symbol here. Now here's a stock that's starting to show some good signs of strength. We're getting bigger volume on these up days right in here, so that's good to see. Getting low volume on these pullbacks and the big volumes coming in on the rallies. Now looking at a weekly time frame, we've got this longer term consolidation that maybe it's going to break out and make another run higher. So I think that CHAP, this is actually a pretty good looking stock potentially for a breakout. Now we've seen short term that it broke past some support resistance rather at 72, and it now looks like it's pulling back. It's making these little lower highs, and now it's made a lower low. So maybe it pulls back down towards about 72.5. And let's just say this is where it closed on let's delete that. Let's say this is where it closed on Friday, and this is Tuesday's action. What I'd like to see it do is maybe come down towards that support, bounce up a little bit, come back down, and then buy it above here with your stop just underneath this level here. So CHAP looks like a good potential trade. Another, if you're bullish on the fundamentals of the steel companies or whatever, another way to play this stock might be when it pulls back down towards, if it pulls back down towards there. But you don't want to buy it on weakness. You want to buy it on strength. Okay, but if it keeps pulling back down, maybe you could buy some cheap September 75 calls. That's something that I would potentially consider as a breakout play to anticipate the breakout. That way you know exactly what your risk is. And here the volume in CHAP is 420,000 shares. So that's pretty thin for a $73 stock. I bet you there's going to be a huge spread in that. So options may be a better idea. PEIX. PEIX. Now this email, first of all, the daily time frame is just a tight range in here. We've got these moving averages crisscrossing. It's telling me there's really no reason to be involved in PEIX. PEIX realistically was yesterday's news. The ethanol play got way overhyped. Now the stock's breaking down. I think that we're getting these bounces that are becoming less. The buyers are less invigorated. Now the play here was considering to buy above 1850 or to short below 1830. I would say that the short below 1830 or whatever this level is here, maybe 1815, would interest me a lot more than the long play. In fact, I wouldn't play this as the long. We've still got that 50-day moving average declining. I would be more interested in the breakdown, but again, if you can't decide whether it's long or short, it tells you that there's no trend here, that that maybe you're scalping, and that's fine, but it's not really something that you can analyze on this type of time frame. And then, in other words, you have to analyze it intraday. You have to be a lot quicker than that because things are going to change. BVX, Boy Victor X-ray. This is a stock that it broke down over here, but it did come back up and recover. Now we've got the 10-day back above the 20 and the 20s above the 50. It came up with a little bit of volume in here. It's been consolidating on light volume. Now the light volume tells me that the sellers aren't rushing in to sell this stock yet, but the buyers are, maybe bidding a little bit. I think it's clear that if you're interested in this stock, stops go below about $7 and let's say 45 cents, and that it's probably a decent buy right around here with that stop in place, and hopefully we could see it come back up and test these highs. So BVX, Bovie Medical, I like this one a little bit better. CHCI comes from my buddy John, who just turned 63 years old, so happy birthday, John. CHCI, who's saying that it looked like it broke the downtrend line. I'm looking at a weekly time frame, and I'm not sure that it did break that downtrend line, John, but it's good to see big volume towards the end of the move. Big volume without further downside typically means accumulation. The problem is accumulation can occur for months, years. The stock could just go sideways for quite a while. Now, if we, it depends on how much data we look at, whether it broke the downtrend line. When I'm looking at 150 days, it broke the downtrend line, and it was able to come back up above this level where it broke down from. However, it's extended in the short term from again, where has it come from? Where does it have the potential to go? It just ran from 430 to 580. It just ran $1.50. So, and what is that? That's about a 30% move. Where does it have the potential to go? I'd say it came up right to where it should have gone. So unfortunately, I think the move has been made here. The better bet would probably be a short below this level here, even with a rising 5-day moving average and a stop just above there. It'd be a 20-cent risk. But I just don't like it, John, so maybe there's a better one out there. BHI as a short sale, Baker Hughes. And I think that this looks like, potentially it could break down. It's finding support along this longer-term trend line on the weekly chart, and it's broken through some important support. Now in the daily time frame, we can see that a lot more clearly here, that this level of support's been broken, and that 200-day moving average. So when we look at the hourly time frame, we see this is where there's the potential for resistance, right up near about $73 a share. So right now in the short term, it looks like the buyers are still, are regaining a little bit of control for the short term. The 5-day moving average is still heading lower, so I like that for the potential short sale scenario. But it's making a higher high, and it's got these higher lows. So, right now I would say you want to wait for it to break below $70 a share before you sold it short. But then again, it might, let's say this was Friday's move. It might just, and this is where it closed right here. It might continue to do this, and who knows, it just keeps going higher. We want to break below this low here and then maybe set our stop at about that level there. But Baker Hughes, I think, is setting up as a potential better short sale play. Yahoo, this was something that somebody had gotten out of and they want to get back in. Again, where does the stock come from? Where does it have the potential to go? The stock broke down on earnings and had a hard time, but it rallied back up to where? Now, look at, for about 6 months, we had the stock trading with support at about $30 a share. Now, if you bought it at $30 a share, okay, and then you saw the stock break down on a gap like that, what's your initial instinct going to be? maybe you don't want to sell it right there, but you tell yourself, hey, as soon as I can get my money back, that's it. I'm going to sell this thing and get out even. Now we've got the 10 above the 20-day moving average, the 50-day moving average is declining. I think the stock probably doesn't have much upside left in it. I think there's a big natural source of supply right over in here. It would have to get above and hold above 31 or so for me to get a little bit more bullish about it and thinking that it had a better chance of holding on to these gains. But I would expect maybe you're even going to see something like this move failing here, trapping the buyers in, and then breaking back down through here and dropping lower. My bias on this is negative. I think that you're probably going to see a retest of this 25 level. Look at the monthly time frame for a minute. Look at this, look at how significant this breakdown is. The buyers had control from early 2003 right up to the end of 2004. They pushed the stock from $5 a share up to 35.40. Then we had distribution. That distribution has turned into a decline. Now on here it's telling me that the big money has been net sellers of the stock. The sellers are in control. We can see that clearly here on the weekly time frame. We've still got, even though it's been a nice rally, we've still got this series of lower highs and lower lows. It's going to have to get back above there for it to be really in a longer term uptrend. Yahoo just doesn't really do it for me. And then this same person wanted Broadcom on the next couple months. So I think we've covered Broadcom already. I'm going to wrap this up for now, and I'll finish up with the other video questions in the next video. Thank you.